guys, welcome to my YouTube channel. And today I'm gonna be showing you one of my favorite trading strategy which I love to trade whenever I can figure it out on my trading chart. And that trading strategy, that chart pattern of mine is a double top no formation. Whenever I figure out this nutrition, I say it's an opportunity for me to bargain a lot of profit into my trading portfolio. So I'm gonna be sharing with you guys how I do not take this trade, how you can spot this out, how you can avoid a fake one, how you can dissociate the fake from the real one, how to avoid jumping in too early, and then how to avoid getting in late. All are the things you need to do in order to know to execute this type of trading strategy so you can have a high winning probability of trade. This is what I'm going to be walking you guys through today. And if today is your first time viewing my YouTube channel, do not forget to click on the subscribe button and also click on the notification bell, so whenever I release educational content of this kind, you're gonna be the first to be notified. So let's dive into the video right now. So right here, let's say for example we have a market which had been in a bullish rally, in an upward trend. We have a rally like this, and then there comes a time whereby you have a certain level whereby we have a retracement of price. That is a pull back of price. We can either call this maybe a counter trend, whereby price makes a rotation downward to a certain level, and then again price makes a reversal, that is a U-turn of price to another upward rally. Thereby we have a certain key level at this zone right there whereby price makes a hot price stop at this region, and then we have a double top right here. Actually, you can't call this a double top not only if we can figure price makes another rotation of price downward in a downward movement. Whenever you figure out price it makes a rotation downward right here, then it's actually what is gonna form right here has a high probability that this is gonna form as a double top. Thereby we have another swing right here, whereby we have a double top right here, and then we have a swing low right here. Whenever you figure out this on your trading chart, then here comes an opportunity for you to tag this region right here at the first top, and then this region right here at the second top, whereby you can actually tag this zone right here as the neckline. With the neckline, I have the second top right here, I have the first top right here. But before you can make a conclusion price is actually going to transfer into the double top, there is a factor you have to put into consideration, and that is the neckline right here. If price can't make a rotation right to this zone right here, actually price can make a rotation to this zone right here, and then we have a pullback of price to the upward movement. So which means this double top of formation to form is already void. So what we need to look out for right here as a trader is look for a break of price below this swing of this previous high low right here. Remember, there it's an upward trend, and then we have a swing low right here. Definitely this is gonna act as a high low for this previous upswing at this region. Take note of that. So whenever price approach this level right here whereby we tag as a neckline, then this is the zone whereby you need to pay close attention on your trading chart. Actually, this is where the action is gonna come in, this is where the trick is gonna come in, and then this is one of the region whereby some traders they do make some trading mistake whereby they jump the gun, and then they get into a trade whereby they are bearish trap, they are trap whereby the institutional traders they make a reversal of trend, put back of price back into the upward movement. So how can you trade this chart pattern right here? Whenever you figure out this on your trading chart, this way I'm going to be showing you my trading strategy, my secret of trading this kind of chart pattern on my trading chart. So whenever I figure out the neckline right here, so what I need to see at this zone right here, it's a bearish price action that will support and aid this downward trend right here before we have a breakout of zone right here downward. So I'm gonna erase this off, okay, so I can make it right here. Okay, good. So what I'm gonna look out for at the zone right here, this is the zone right here where we want to take the action. So one of the signal I must figure out right here are bearish price action signal, like something like the bearish pin bar, and then I can have the bearish engulfing bar, you can have the dark cloud, is a bearish candle, and then a dark cloud, a bearish pin bar. Or actually, this your bearish pin bar can actually, the color doesn't mean, so it can be a bearish right here, and then right here can be a bull. But in this such a downward trend, if it is a bearish color right here, it's more very powerful or suitable for the downward trend, provided it's moving in line with same direction of the downward bearish trend. And then another candle formation, that is price action, you can figure out like is the theory inside down, where we have the bullish candle right here, and then we have a bearish candle, we have this inside down, bearish candle, bearish no candle, inside or down. So these are the price actions, no signal you must look out for. Actually, there are a lot of these candle signals you can look out for at this zone. We have the like the evening, no star, or this kind of, but one of my favorite candle which I love to make use at this zone right here is the I love the pin bar, rejection bar. It simply means at this zone right here, that was a bearish, no action, we have a rejection right here, and the right here, the bearish engulfing bar right here simply means after we have no movement, maybe the first breakout, then we have a bullish rally, then what comes next is the bear no engulfs the total no, that is a retest, whereby this bullish candle right here is acting as the retest of this broken neckline, that is the key level support. So this is the retest, whereby this is no the rejection bar. So here comes the rejection bar, okay. So this is the retest bar, okay, whereby on the bearish pin bar as well, the upper wick right here, the long leg right here, the leg is that is the retest, and also the rejection. So your bearish pin bar right here, whenever you figure it out on your trading chart, that is at this level right here, it simply means here is the rejection, and also this one right here is the retest, okay. Right here is the retest. Also it serves as the rejection bar. So one of my trading signal, favorite signal I love to look out for is the bearish that is the bearish signal pin bar, bearish pin bar. So whenever this forms, it's one of my strategies, trading signal, which it's very reliable due to the consistent profitable record which I have I've gotten in my trading experience, and then which I have my historical record on this strategy. So I look out for a rejection of bar. Your rejection of bar can be the bearish pin bar, can be the bearish engulfing bar. I have a course on that. You can check on one of my videos right there. I have which I discuss about candlestick formations. I think that can help you. So these are one of the places where you can implement all this your Japanese candlestick rejection, bearish, interest, bar. So that is what I look out for right here. I don't take the first breakout. First, I wait out for a breakout right there, and then look out for a retest before I short. So here is the analysis breakdown. This is the first breakout. This is the neckline. So I wait for a retest, and then I figure out a rejection right here, rejection bar. Then I short at this zone downward. So that is one of the strategy which you can apply to take the double top formation. And then the other strategy which I'm going to discuss with you guys, so I'm going to construct the double top again right here, and then here is the neckline. So there are some kind of situation whereby price will pull down in a volatile, let's say for example in a volatile market whereby we have a very high bearish momentum, whereby price will make a huge rally downward, and then we won't find out a retest, whereby we won't find out something like this, that is a retest. The price will just move down drastically, that is in a full force bearish momentum. So how can you trade this kind of action right here? So this is how you can trade it. Remember, the point of interest right here, the zone right here, this zone is where we have to put into consideration, because this is where the action is actually gonna take or happen. This is where it's gonna occur. So this is what I want to do right here. So at this zone right here, so I'm gonna clean this off. Okay, so let's say for example the price is actually at this zone, and then we have a huge break of price downward. That is right here. You want to take a breakout strategy. You want to take a breakout strategy whereby we have the first breakout right here, and then which comes with a huge bearish momentum. That is with a decisive bearish candle without no rejection. Take note, if you want to take the first breakout of this strategy, you must make sure there isn't any rejection. That means there isn't any bullish prayer. This is what I mean. Let's say for example, so here is it. I have this bearish candle right here. Let's say for example, this candle actually formed at this zone right here. So I have this bearish candle right here. This is the bearish candle with a decisive breakout. You can see this long bearish candle is different from something like this, whereby you have a bearish candle, and then another like this, whereby you have a bullish prayer. So right here is a bullish prayer, whereby right here is a my volume, while right here is a decisive volume, a huge bearish breakout. So whenever you figure out this kind of breakout on your trading chart, whereby you have a breakout, a long bearish candle, it's a signal that the bears are really aggressive in that trend, and there is high probability that you may not find out opportunity of a retest whereby you can get in. So whenever I figure out this kind of breakout on my trading chart and I see it's a decisive volume of breakout, take note, it must be a decisive breakout of volume without any rejection, without any bullish or prayer. So this is what I do whenever I figure this out. The next thing I want to do is I want to short at the next opening of that is the next candle. And that is what I do. You have to make sure the candle actually formed. You have to wait to the end of your time frame analysis. When I make your time frame analysis, let's say for example I am using a 4-hour on this chart right here. This is a 4-hour on this chart right here. So what I need to do whenever I figure out a kind of breakout like this with a decisive bearish candle right here is we have to wait to the end of 4 hours so I can see the end, and that is the outcome of this bearish candle. Sometimes whereby we have a bearish breakout like this, where you don't wait till the end of the formation of that candle. Maybe you are trading on a daily time frame, that is a close of that candle, maybe from 1 hour, whatever time frame you are closing. If you don't wait till the end of that time frame to come to an extinction, there is high probability you can there can be a pullback of price. There can be a pullback whereby price actually formed out like this, and then what you see next is price makes a pullback, and then we have a weak low. That is right there, we have a pullback, and this usually result into a bullish reversal signal or a bullish or pin bar. So I have to wait for the end of that candle or close. So when you figure out the end of the candle close, then without no rejection, without any bullish prayer like we did have right here, it's a bullish prayer right here, bullish prayer, and then this is my volume right there. So when you see this kind of formation, that is the next candle right there, I can actually implement my next pending under some pips below that long bearish or candle. And then take note, applying this breakout strategy, you have to be very, very conscious. You have to know what you're actually doing. That means you have to implement a healthy money management system. That means, for example, in a case whereby I'm going to take a retest, whereby, let's for example, if I want to take a retest right there, after I've seen I have a retest, and then this is my neckline right here. This is my neckline right here. It's now acting as a new resistance level, thereby giving me a double confirmation. I have a successful retest, and then I have a signal for a bearish downward trend. Let's say, for example, if I want to take one lot right there, In the case of an instant breakout whereby I see a well decisive candle, bearish candle formation, I won't take this kind of position size right here because anything can happen. The market can make a reversal of price. There is no strategy which is 100% perfect. There isn't any strategy which is 100% perfect. So if anyone says you a strategy is 100% perfect, it's not possible. So that is why any trade you want to take in the first market or whatever market you trade, maybe you trade stocks, binary option, cryptocurrency, you have to implement a healthy money management system. You have to have no stop loss in place. And then before you get into a trade, you must have analyzed your trading decision, where you want to get out, when you want to get in, where you want to take your profit, and where you want to take your loss and walk out. If you didn't get into a trade and then start analyzing where you want to get in and where you want to implement your stop loss, before you get into a trade, you should have already have your trading strategy plan, and then you execute your plan, and then you follow, you stick to your plan to the end. So in the case of right here, I'm gonna actually, if I'm taking the first breakout, I will have to divide my actual position size into 5 places. That is, if I'm taking one lot, if I'm not take the first breakout right there, so I wouldn't miss this breakout opportunity right there, then I have to take something like 0.2. That means if anything goes wrong, on this trade right here, that means I just have a little to risk. And then where should you apply your stop loss right here and your take profit right here? So I'm going to show you on the next screen right there. Now that we have confirmed this as a potential double top formation, so where should we actually implement our stop loss and then our risk ratio? So there are two different strategies. It all depends on the strategy you apply right here. So if I'm taking a retest strategy, first I'm going to discuss about the risk management for the retest strategy. So if I am taking the retest strategy, this is what I'm going to do right here. So let's say, for example, this breakout right here, I have this right here, and then I have a breakout right here, I have a retest right here at this zone right here, I have a retest right here. Okay, so where should I apply my stop loss? This is the region right here. I will want to apply my stop loss above the last swing high of that rejection bar. So let's say, for example, this zone right here, this is I have a rejection bar. Let's say I have a bearish pin bar, something like this, up like this. So where I'm gonna apply my stop loss right here is gonna go maybe some 5 or 10 pips above. It all depends on the time frame you are trading. If you are trading on a daily time frame, actually the risk management you're gonna apply, or the pips of your stop loss, is actually gonna be higher than where you're trading on the lower time frame. So it depends on the time frame you wish to trade. So my stop loss is gonna go above this, or my swing high of this, my rejection bar or signal bar right here. It can be some 5 or 10 pips. It all depends on the time frame I'm using for my trading decision. Maybe I have my stop loss right there, and then if I want to measure my take profit target, that is, if I have a break out of this zone right there, and then I have my stop loss maybe above this region swing right here, and I have my entry right here, my stop loss right here. There are 4 ways whereby you can implement your take profit target, and I'm going to show you. So the first strategy you're going to apply is to measure from the top of the second top right here. Measure from this zone the length, that is the distance from this zone right here to the neckline right here. So if the distance from this second top, right here, let's say the distance is 100 pips. Okay, 100 pips, then it means your take profit target from this breakout zone right here should be close to 100 pips. So you can measure from this zone right here, maybe the next 100 pips right here. Actually it's at this zone right here, at this level, 100 pips. So here's what you do: you measure your take profit target to be some pips before 100 pips, because there are some times whereby market may not get to the exact measurement, and there are some times market can get right there, get a reversal, or actually break that actual distance, no, from this top right there to the neck right there, and then break below, no. So you just have to implement your take profit, no, maybe some, maybe 5 pips or 10 pips before the measurement of that target. So let's say this one right here is something like a 90 pips, so I'm gonna just have my take profit right here. So this is the first strategy you can implement for the trading of the double top, and I'm going to show you the second strategy now. The second strategy is the implementation of your take profit at the next key level support zone. So let's say this is the next key major support level. So what I need to do right here is to apply my take profit at this key level support, because due to historical price action record, it means when price goes to this region, we had a reversal of trend whereby price made a rejection up. It may even be this key level support which reverse this trend up before we have a double top which formed at this zone right there. So there is high probability that when price get to this same key level support again, price may have a rejection of price or consolidation or difficulty to break through this key level support. Well, no one can tell. Price can definitely break through this key level support. So what you need to do is to apply your take profit to this zone of point of interest, that is a key level support right there. So what you need to do is just to apply your take profit some pips before the key level support. Remember, always make your take profit to be at least 5 or 10 pips before that point of interest. Okay, so just apply your take profit, maybe some 10 or 5 pips. That will be take profit will be around this target here. Okay, so whenever price comes down and then it's your take profit, then you are good to go out with your profit. And the third strategy for implementation of your take profit target is simply applying your risk reward ratio. Actually, before you get into any trade, you must make sure your risk reward ratio is healthy. That means if you are willing to risk like 100, maybe you want to risk $100 what you need to do right here is to make sure any trade you want to take, it have the ability to have at least 2 minimum risk reward ratio. That is it right here, 2R. So if I want to take a trade right after I have a retest, maybe I don't have a retest, maybe I want to enter my entry right here, this is what I need to do. I need to measure from my entry to my stop loss level. Maybe from my entry right here to my stop level right here, maybe it's let's say it's 50 maybe euro or pounds, maybe it's a 500 euro, whatever amount you trade, position size you trade. So if your stop loss is, let's example, $50 euro, that means your take profit target must be times 2 of the actual amount you are willing to risk. So here comes the trick. You just multiply your risk right here with 2. That is the minimum target. So right here, if I measure from this zone right here, maybe there is 50 pips right here from this zone right here, then I have to measure from this zone right here, and if this zone is 100 pips, then that is good. And the fourth strategy of mine for trading the double top is applying your trailing stop. Let's say, for example, right here, I enter a trade right here. This is my entry region right here. I am risking 50 pips right here, and then the market moves downward in a bearish trend. So this is what I want to do right here. After I have made at least right here, maybe 1.5 of my risk, and in which I'm applying maybe the 3 risk reward ratio. I've made like 1.5. What I need to do right here now is I can either shift my stop loss to break even. That is my entry zone, so that I can avoid any unwanted losing trade. Maybe if the market just make a reversal, maybe there's a sudden volatility in the market, if the market just make a pullback, a reversal back, so I won't go to loss again. Or I can just key some profit out of my 1.5. I can just key maybe 0.5 of my profit right there, and then allow my winning trades to run. So that is a strategy you can apply on the double top right here. You can also apply this reward ratio management system to others or strategy you want to actually trade as well. So I'm going to discuss about the instant breakout of this strategy right here. That is the double top. So let's say, for example, we didn't have a retest at this zone right here, and then we didn't have a retest, we just have an instant breakout. So how can you actually trade this? So I'm going to show you how you can trade that. So here is a double top, this right here. Then we have an instant breakout of price without having a retest at this zone right here. We don't have a retest right here. Instantly we have price breaking below this our neckline. So how can you implement your stop loss? Actually, this is what you need to do. Remember, when you have an instant breakout whereby price doesn't make a pullback or a retest of this support level right here, or we can also call it as a neckline, this is what you need to do. First thing is you have to take a very short small position size. If your actual size is one lot, you can divide it into like 5 places and then take small position size. And then the second thing you need to do is you have to place your stop loss above that broken support level, some pips away. So you can place it right here, above right here. It may be above the last candle which formed right here. Let's say, for example, I have a candle right here, and then I have another bearish candle whereby this is the breakout candle right here. Don't mind my drawing. This is the breakout candle. This is the previous bearish candle. Like, for example, we have this bearish candle right here at this zone right here, and then we have this breakout bearish candle at this zone right here. So where should your stop loss go? Your stop loss should go above this previous bearish candle before we have the breakout. That is your entry signal, entry bar. I mean, this, remember, this is your entry signal, entry bar. This is your entry bar. So what you need to do right now is to put your stop loss above right here. You can see putting your stop loss above right here, it means you have a lot of risk in place, and that's why I said you have to implement a small risk reward ratio, and make sure this your position size. If you want to measure from your entry level to your stop level target, it doesn't approximate to the actual position you take whenever you want to take a trade or for retest strategy. So for example, right now, if you are risking one lot on retest strategy and then you want to take a breakout strategy right here, your stop loss shouldn't be more than 0.2. that is, if you divide your one lot, it all depends on the position you want to take, but make sure it's not more than 1/5 of your actual position. So 1/5. Okay, so that is it. So you initiate your entry order, and then you can target the next support level, but make sure you have enough room for your trade to run. That means any trade you want to take, make sure it obeys the at least two risk reward ratio, whereby you can make at least ×2 of your risk right here. So I'm going to show you an example on our trading chart right now, so we can see the live trading of this on our trading chart. So I'm going to show you I have on the Australian New Zealand right here. Here is a double top formation right here. You can see this is it right here, and then I'm gonna this is the first top right here, the second top right here, and then here is the neckline right here. You can see right here, this is an inverted double top. This is a double bottom right here inside a double top. Actually, don't expect the neckline of your double top to form in such a well manner like this. It's possible you may not find something like this. It's possible you may find a double top like this, something whereby you have something like this. So the neckline won't just form just like a clean drawings like I showed on our whiteboard. So take note, there will be a possibility of movement of price right here in different manner, in different direction. So all what you need to do is just make sure you understand that actually what is happening right here is a possibility of a double or top. And then you can note something right here is I have no that is double top, you can see a double bottom right here is a double bottom right here, which is also an inverse of this double top right here. An inverse of this double top right here, you can figure it right here. Is it? You have this downward right here, we have it up right here, downward right here, up right here. You can see before we have it downward right here. So we actually have no this, and then this. So you can see this kind of no formation right here, whereby we have an inverse double top. That is a double bottom. The inverse is the double bottom. Why the when it is upward in an up direction, it's called the double top. So this is actually what formed right here. You can see this trick right here, whereby some traders have been no trick, whereby they think this is actually gonna move above this last swing high right here, whereby we have a break of price below right here. So this is what I'm talking right here. Whenever you have the first breakout right here, you can see we have a retracement right here. I'm gonna zoom in. So I'm gonna zoom in right here. You can see we have this bearish candle, we have the next candle. Don't take the first breakout, and this is an example of the candle I emphasize on. You can see this retracement right here. We have a retracement before we have another pull down, a retracement, and then we have a retest. You can see this retest right here. So whenever you see this kind of retest, you have your stop loss above the last candle right here, out of the breakout right here, and then you short at this zone for a downward trend. Imagine you know how to trick this kind of double top strategy in your trading system. Let's say we short from this region right here. This is our entry right here, our stop loss is right here, and then this is the next key level support, whereby we have our take profit target right there. So let's make sure that, so our entry is right here, our stop loss goes above right here. Let's say we risk 50 pips, and then to the next key level support, that is 100 pips. Wow, it actually obey our minimum to risk reward ratio. So imagine you apply the trailing stop strategy, and then you didn't get out right there, you were just trailing your profit. After you can see this bearish price action right here, you trade your profits to this zone, and then to catch the breakout of this key level support right here. Imagine from 100 pips downward right there, that is additional of 208 pips, which means we risk 50 pips to make 300 pips. Wow, that is wonderful. And then which means right here we actually applied, that is the risk 50 pips to make 300 pips, and that is 6 reward ratio. Wow, this is wonderful, great. Isn't that amazing? Yes, it is. So this is how I trade the double top, and I bargain a lot of no profit into my trading portfolio. So guys, I hope you have understood this, and then you can inculcate, implement this into your trading strategy as well, so that you can improve in your trading career in the forex market. Actually, you can apply this to whatever market you trade: gold, cryptocurrency, Bitcoin, treasury bills, commodities, energy. Whatever market you trade, you can apply this strategy. So thanks for watching, and then do not forget to click on the subscribe button, click on the notification bell, and then share this video with your loved one, people you know who is gonna benefit from this video. Thanks for watching, and then do have a wonderful day. Peace.